Now, Part A has a premium, a monthly premium, but for most people, it's already paid because you paid FICA taxes during your working years. You said you were retired. Did you work at least 10 years and pay FICA taxes? Okay, so you've got 40 quarters of FICA taxes paid, and that covered your Part A premiums. You're done. Part B is medical insurance, and that does have a monthly premium. And for most people, that's $185 a month. Now, there can be an exception to that. If 2 years ago, they're always looking back 2 years, so we're in 2025 right now. If in 2023, did you file taxes individually or jointly? Jointly, okay. If your modified adjusted gross income was in excess of $212,000, then your Part B premiums will be higher than $185 a month. And then we need to have a conversation about IRMAA. Okay, so I do get people that say, I don't make that much money, I'm not at risk of that happening, but there's a couple of ways that it could sneak up on you. Let's say that you sell something. You have an asset like a shopping center or a piece of land or maybe some securities that you sell. And for that 1 year, you get a spike in your adjusted gross income. Well, that might trigger these IRMAA surcharges. Another thing that could happen is...
Even if would it have to be historical or would it be current?
They're always looking back 2 years.
Okay.
So they'll reevaluate it each year. And so if this happened in 2023, it would impact you now. If it happened in 2024, it would impact you next year. Another thing that could happen is
That's $212,000 annually together?
Together, yeah. And it'll be more next year. So it changes every year. There's a chart in there. In fact, you're writing on it right now. That shows, there you go. That shows all the IRMAA brackets there. Another thing that could happen is somebody retires and maybe you've been contributing to a 401k or an IRA during your working years, and your financial advisor says, well, now that you're in a lower tax bracket, let's go ahead and do a Roth conversion. You pay the taxes on. Well, that's a taxable event. That could trigger it also. So there's a couple of ways that...
Doing that really soon.
Yeah, I did that. Wrote a great big fat check to the IRS. So keep those things in mind when you're talking with your financial advisor, that you might trigger this IRMAA surcharge. Be careful about it. You might want to do it in phases. So just keep that in mind. If you need help with that, there's opportunities maybe to appeal the IRMAA surcharges since you're retiring. So it can get quite expensive. So if that happens to you, call me and I'll try to help you with it, okay?